What's going on, you guys? Welcome to another video by Real FX. In this video I'm going to be teaching about the quasimodo setups and the quasimodo levels, and I'm going to be showing you how you can apply this concept into your daily trading so that you can start making serious money. And if that sounds like something that you're interested in, stick around till the end of the video and don't forget to give this video a thumbs up, and I'm gonna see you right after this intro. Okay guys, now without any waste of time, let's get into it. But before we dive into real chart examples where we start analyzing, let me teach you the quasimodo trading setup first. So I am going to draw a simple upward trend, and you know it's an upward trend because we are having higher highs and higher lows. Now let me label this trend over here. I'm going to label it as higher high. This one is our higher high, and this one over here is going to be our higher low. This one over here is again our higher high, and this one is also our higher low. So we are saying these are higher lows because the subsequent low is higher than the previous one, same as the highs of this upward trend. Now any SMC trader in this kind of situation would be looking to continue buying to the upside. So we would be looking to be buying from around this area here. This is where we would mark our order block. Okay, so now let's say instead of the market will retrace to the downside, but instead of respecting this order block, it takes out that order block and it pushes to the downside. And when we see something like this, we all know that we are having a change of character. So you can go ahead and label that as our change of character. And then when this change of character happens in the market, this is where we start looking for our QML. So I'm going to show you where we look for our QML. Okay, so this is going to be a breakout of structure. This is a BOS. This here is also a BOS. It's very important to label your chart, guys. Don't forget to label your charts so it can be a very clean chart. So this is your BOS, and then here we had a change of character. So on this higher high here, this is where we are going to be marking our QML level. So this is our QML. So our QML starting from this high here and then going to the right like that. So this is our QML level. So what happens on this level is that when the market retraces and reaches this zone, this is where we are going to be looking for a selling opportunity. So what we expect is to see the market retrace into the zone and then push to the downside. But before that happens, there are some things that we look along the QML. So on the QML level, we have to see an order block. We expect to see an order block around this area, or something that can be considered as a significant trading point. It can either be an order block or a hidden order block or any other kind of candle that other traders use. So we are going to be looking for our selling opportunity right around this level. Okay, so the other thing that we should look out for is liquidity. So the market must generate liquidity as it approaches our QML level. So this liquidity can be in the form of relatively equal highs, or it can be in the form of trend lines, and then it must tap into our QML level and then push to the downside. So let's say we have an order block right on this QML level. The market taps into this order block and then it pushes to the upside. So this is going to be our trading zone. So another thing that we have to consider is that when the market reaches our QML level, we have to dive deeper into a lower time frame to look for a change of character. So let's say the market reaches this zone here, and this is what we're going to be looking for. We are going to look for something like this. We're going to look for a change, either a change of character like that. Let's say the market was coming towards the QML level. We're going to look for a change of character and a minor QML level and then a push to the downside. So this is a way of confirming our entry, and this will help us to reduce our risk, and then this will also increase our risk reward ratio. So here, as you can see, we're going to be looking for another QML level right around this area, and then we are going to dive into a lower time frame to look again for another order block like that. And in this lower time frame, even if we do not spot enough liquidity, we know that on the higher time frame enough liquidity has already been generated, as you can see, with this relatively equal highs, or it can be some sort of inducement. So once we spot that inducement, we know that enough liquidity has been generated in the market, and the market is ready to push to the downside. Okay guys, now we are on the Euro USD, the 4-hour time frame. So as you can see, we were in a downward trend like this breaker of structure. We're having some serious breaker of structure to the downside. We also have another breaker of structure here. Okay, and then after this breaker of structure, let me go ahead and label this breaker of structure, breaker of structure. Also, this is a breaker of structure, and after this breaker of structure, we had this here, which was a change of character. And remember, for a change of character to be valid, the candlestick must break and then close above the previous high. So this is a change of character to the upside, so we can go ahead and label this as our change of character. Now, where is our QML level? As you can see, our QML level is going to be around this area, and then this is the area where we would be looking to start buying to the upside. As you can see, the market came into this area, it tapped into this area, and then this is where we dive into a lower time frame to confirm our entry. Or other traders who like to trade aggressively can just take a buy here, and then this is going to be our target, and this is going to be our stop loss, and this is going to be a 1:5.41. So I like to confirm my entry, so I like diving deeper to a lower time frame. I'm gonna first go to the 30 minutes time frame. So let me get rid of this. I'm gonna go to the 30 minutes time frame. Okay, now we are on the 30 minutes time frame, and let's look at the market just before this move to the upside. Let's look what happened. So the market came into our marked area, into our order block that we have marked there, and then after this the market started reacting from that marked area to the upside. And then as SMC traders, you know how we mark this thing. We had, let's look at this minor structure here. We had a breaker of structure to the downside, so let's label that. We had a breaker of structure to the downside, and then we had another change of character here to the upside, and this change out of character is a minor change out of character. And then we have to start looking for what? We have to start looking for our QML. So this breaker of structure here is going to be our QML. So this is our QML level, as you can see. So this is our entry point. This is where we were going to be looking for our trading point, right around this area. This is where we're going to be looking for our trading point. And then as you can see, let's say we enter from here. That's where we were gonna enter, and then our take profit was going to be the high again, and our stop loss is now going to be very smaller. As you can see, this helps in increasing our risk reward ratio and reducing our risk. So let's say we put our stop loss right above here. As you can see, this is a beautiful 1:10.2. so this increased our risk reward ratio, and then it reduced the number of pips we're going to lose on this trade if ever it went against us. Now let's go ahead and look for another example. Now I'm on the GBP USD. I'm still on the 4-hour time frame. Now let's look at this. Actually, I prefer to trade to look for a quasimodo setup on the 4-hour time frame. Okay, so other time frames like the 1-hour time frame, the 30 minutes time frame, even the 15 minutes time frame, I use them to confirm my entries. So as you can see here, let's look at this reversal here. So on this reversal, we had this kind of breakout of structures to the downside. So this strategy can also use it to catch a reversal. So we had breakout of structure to the downside, another breakout of structure to the downside like this. Okay, so we have that breakout of structure, and then after that breakout of structure we have this change of character to the upside. Okay, so we label that change of character, and then after, it simply means this level here is going to be our, this level over here is going to be our QML. So remember, the last breakout of structure before a change of character is our QML. So we going to be taking this as our QML all the way to the right, and then we expect the market to show some sort of a reaction when it gets to this area. Okay, so extend this to the right like this, and then this is on an 4-hour time frame. As you can see, the market reacted on this order block that we have here. Here we have an order block, the market reacted on that. Now we're going to dive into a deeper time frame or a lower time frame to see how we would have entered this trade. Okay, so we're gonna go to the 30 minutes time frame. Okay guys, now we are on the 30 minutes time frame, and as you can see here, this is the reaction on the red zone, our order block. And then this order block is a perfect order block because there is some sort of imbalance after this order block to show that the market is going to come back to fill this imbalance that we have over here. So after tapping into that order block, the market did something here. It pushed to the upside, and then it broke structure, and then it started pushing to the upside. So as you can see here, this is the last order block. Actually, not the last order block, this is the last breakout of structure. As you can see, we had, even though it's a small breakout of structure, we had a retracement and then a push, and then we took that out. Okay, so after taking that one out, we can remember the last breakout of structure can always be taken as the QML level. So we're going to be taking this as the QML level, and we're going to be looking for the order block that is somewhere around our QML level. So as you can see, this over here is a significant order block, and then we can also take it all the way to around this area. That is a good order block. And then as you can see, what happened when the market retraced into this order block, the market even generated liquidity before reaching this order block here. As you can see, this is our liquidity. Okay, and here we have our change of character to the upside. Is going to be our minor change out of character. And then as you can see, the market had a reaction, then it started shooting to the upside. As you can see, when the market reacted on this zone again, it came to create another change of character here. Okay, it came to create another change of character, and then it reacted on another order block here. So you could have entered another trade over here, and then at the moment the market is still in an upward trend. It hasn't hit our take profit yet. Okay,